Bismillahirrahmanirrahim. Assalamu alaikum. In today's video, we are going to talk about letter of guarantee. What we will learn in this video, we will see what is letter of guarantee. I will share with you a real life example so you will understand the definition well. And also we will see the complete journal entries of this concept. So let's start with the help of real life example that we will define the letter of guarantee. What is this? For example, assume XYZ company wants to buy goods from ABC company worth of 1 million. XYZ company has requested ABC company to supply them to their warehouse. Okay. ABC company wants XYZ company to provide them with the letter of guarantee before they commence the delivery. So XYZ went to their bank to provide a letter of guarantee so that the supplier can start supplying the material. The bank confirms whether XYZ qualifies for the guarantee letter. Once the bank satisfied, they will proceed with the issuance of legal document for 1 million with the validity of 90 days, 120 days, 30 days, whatever the payment terms you are having with the supplier. So the bank will issue the letter of guarantee. Upon receipt of the letter of guarantee, the supplier proceeds to supply the material to the buyer like XYZ company. If XYZ company fails to pay the material cost, then ABC company has the right to claim the compensation from XYZ bank within the terms of the payments mentioned on the letter of guarantee. So this is the concept of letter of guarantee, because when the people wants to trade with each other with the higher value, so the supplier, they are asking from the buyer to give us a letter of guarantee so we can proceed with the terms and conditions of the purchase orders. So let's see the journal entries now. There are two conditions. One, the first condition by the bank, when bank deducts his interest rate on immediately issuance of letter of guarantee. Like we went to the bank as a buyer and we asked for a letter of guarantee. So what bank is doing, they will check the eligibility of our account and they will issue us a bank guarantee, and immediately he will make a debit to our account with the percentage of the interest rate which they will charge on the bank guarantee. So they will deduct that amount immediately from our account. There is a second condition, when bank deduct his interest rate after the completion of LG terms and payment made to supplier. When the bank or the buyer will make the payment to the supplier, then bank will deduct the interest rate from our account. So these two conditions, we will see the journal entry for the first condition. So the first journal entry is when bank charged interest immediately upon issuance of letter of guarantee. Now, when bank issued LG and bank charged interest immediately. So here we need to create an account in our chart of account as a prepaid interest expense, in balance sheet as a current asset debit with the interest rate like 5% on 1000, so it will be $50. And bank account balance sheet current asset will be credit, which has been deducted by the bank from our account, will be credited by 50. So this is our asset, prepaid asset, and this is our current asset also, which is deducted by 50, interest deducted by the bank. Now the next step, when supplier delivers the goods to buyer, when the supplier is going to deliver us the goods, so we will make purchases expense account will be debit. If this is an inventory, we can make as an inventory account as a debit, okay, in the current assets. So if this is an expense directly a purchase, then we have to make a purchase expense debit with the total value, okay, and interest expense account in profit and loss will be 50, will be debit, and prepaid interest expense balance sheet current account will be credit. This account we made earlier as debit. So now we are going to recognize as an expense, so we need to adjust this value also as an expense in the current period. So supplier account as a liability, balance sheet will be credited by 1000. So liability is created for 90 days, 30 days or 60 days, whatever the terms or conditions you have with the supplier. Here, the next step, when the buyer is going to make a payment to the supplier. Here supplier account liability will decrease with 1000. Here we have make credit. So here the supplier account will debit and bank account will be credited with 1000. So this is the first condition you have to treat your letter of guarantee. Here we have a second condition when the bank charge interest after completion of the LG terms. Here when supplier delivers the goods to buyer, here you can see we didn't make this entry here. The first entry we didn't make because the bank issued us a letter, we submitted to the supplier. Now no any transaction happened yet from our account. So we don't need to make any entry. So when supplier deliver the goods to buyer, it will be a normal trade. So purchase expense debit or inventory account debit and supplier account liability will be created. So when the payment at the maturity date made to the supplier by the buyer or either by the bank, if the buyer is unable to pay, the bank will pay directly. So the supplier account liability account will be debit. This amount was debit. Sorry, this amount was credit. Now this amount is going to be debit as a supplier account. So interest on LG expense profit and loss account will be debit. This will be to the bank. We have paid. They have deducted from our account. So here the bank account asset current asset account will credit with 1050 amount. So these are the complete treatment of LG. So guys, I hope you understand the concept. Please subscribe our channel. It keeps motivated us to create more videos for you. Thank you very much and goodbye.